The metaverse is going to be huge this decade. There's going to be so many new millionaires made in the next few years. Things are changing faster than ever before. Digital money, gene editing, autonomous driving, to name a few. But the metaverse is likely to continue exploding and be a multi-trillion-dollar industry. Some people, including myself, got left behind on the early stages of cryptocurrencies. But now we're in the early stages of the metaverse, and I have some stocks and options that I want to share with you today that you can buy leaps on in 2022. I'm going to share my screen, show you exact strikes that I'm going to buy, what date and expiration I'm going to buy for these options, and much more in this video, so make sure that you stick around. Also, smashing that like button, rumor has it, it's going to make you stupid rich. First one is Meta. This one is interesting because it sits under $1 trillion valuation. The stock's 52-week high was $384 per share. That's a 12% discount from its peak. With options, because they naturally have leverage baked in, that could be 24 to 36% returns on a safe stock. I believe more money will pour into the FANG stocks and big technology companies. But also, I'm just straight up feeling bullish on Meta. I'll give you a brief analysis and jump into exact options that I would pick. With Meta's price to earnings ratio of 24, you'd think that the market largely expects the tech company's earnings to grow slowly in the coming years. But this is really far from the truth and reality. On average, analysts expect Meta's earnings per share to grow at an average annualized rate of more than 21% over the next 5 years. Quarterly revenue year over year increased by 35%. Management guided for fourth quarter revenue to grow as much as 21% year over. While the midpoint of the social network specialist fourth quarter revenue guidance calls for 17% top line growth, management's revenue guidance has historically proven to be very conservative. So the 21% growth modeled at the high end of management's range will likely be closer to the actual results. Not only should Meta's revenue and earnings grow nicely in 2022 and beyond, but the company also has significant momentum in its user base. Total unique daily active users across the company's apps total 2.8 billion in the third quarter of 2021, up 11% year over year. With such an engaged user base, you can bet your socks, you can bet your cash that Facebook is hard at work finding so many ways to monetize this large activity and the increase in activity, including improving advertising products and enabling more e-commerce features. Now, let's jump into my screen and take a look at what short and long-term options I'm looking at for Meta. All right, so before we take a look at the options, I want to show you the technical analysis. This is very important in terms of picking the correct strike prices. So looking at Meta, this stock was trading at around $375 back on September the 2nd. Now the stock did have a bit of a breakdown in terms of its fundamentals, and it's basically double bottomed at $312 per share, and then again around $306 per share. So we have tremendous support at around $310 per share, and currently the stock is consolidating around $338 per share. But it's only going to take one good earnings release for the stock to pop back up higher, and I believe that this stock can break through this Bollinger Band right here back to around $360 per share and potentially even $377 per share in 2 quarters. And of course, before 2023, this stock can obviously even go up to a potential $400 per share. However, we're just going to assume that this stock is going to reach $370 per share, and we're going to see how we can make money off that and what strike and date to pick. So also, I mentioned that $310 is the support level. That is the reason why on December 2nd, I ended up selling a 310 put in the Discord community for $3,175, and then I closed the trade for $565, making $2,500 in about 3 weeks time in the private Discord. It's just an example I wanted to show you because I love sharing my receipts with you. If you do want to check out the Discord community, it's always the first link in the description for the application. All right, so now I have opened up the options. Again, we're shooting for around $370 as the peak price for Facebook by the end of 2023, or really I should say Meta, still getting used to that. So we're going to pick an expiration date for probably September 16th or January 20th. I'm going to tell you what the benefits are for picking each. Let's first of all go for September 16th and take a look at the options here. Scrolling up, we want to go for around $370 in terms of our strike price. Now, again, I did say $370 is going to be very safe, but for a call option or specifically a leap option, you do want a little bit more upside. So $370 is my base case. However, I could see $400 or even more as my bull case. Now for a leap option, option, what we're looking to do is we're looking to replace the stock. So rather than buying 100 shares, which will cost you $33,687, I mean, most people don't have that just laying around. Instead, buying a leap option gives you the exposure of having the stock without having to pay 100 shares worth of collateral. So taking a look at the break-even price, now this is something that I really like in my trading platform. I want to know the break-even price. By the way, if you want a really good platform, simple, easy to use, I'm going to drop my Robinhood and my Webull link for you guys below. Webull will give you 5 free stocks, so I recommend that you sign up for them and just get your 5 free stocks. So because I'm looking at $400 as a potential price target in 2022, any of these options are going to be good because our break-even prices are well below $400 per share. In fact, this 325 strike option is below $370 per share, so this one has a very high chance of having a profit. You would only need the stock to move 9.68% to break even on this option right here, including the premium. Now, to have a true leap option, most people will say it has to be at least 1 year. So let's go to January 2023 and analyze this true leap option, because before I was just taking a look at a call option that has about 9 months worth of expiration. But January 2023 is going to be a true leap option. However, as you will notice here, it is going to be a bit more expensive. And at the money option has a break-even price of $384 per share because the premium here is going to be higher due to the additional time premium. However, a 340 strike is still going to be profitable if Facebook can go above $384.78. And in the case that it goes to $400, you can make $15 per share on an investment of $44, or essentially that's going to be about a 33% return. So although the stock is only going to move 14%, you're going to make about 33% on this option. That's because $400 minus $340 is going to be about $60 in total money that you can make. However, you're paying $44. So 60 divided by 44. So if I'm doing the math in my head correctly, it's going to be between 33 to 36%. That's a 2.5x on your money. Now, something I do want to say, although this is a leap video, I do want to show you quickly what a bull call spread is, because looking at Facebook stock, I think this is a really good opportunity for a bull call spread. What you want to do if you want to open up a bull call spread, which takes even less premium than a leap option, is you want to buy a call option that is right outside of the money, which for this is going to be the 335 call, and then I'm going to sell a call option right above the strike that I'm picking. So I'm buying the 335. All I'm hoping for is that this stock goes past $335 per share, and then I'm going to close off and sell the $340 strike here, subsidizing my call option. Rather than paying $4,718, I'm going to end up selling the 340 strike right here, and my total cost will only be $295. Now, my total return here is going to be the difference in strikes, which is going to be $5 or $500. So I'm risking $243 to make $257. So basically, you can double your money here. You can 2x your money as long as Facebook stock goes beyond or even ends at $340 by January 2023. So basically, you have your 2x strategy plan right there for Facebook using bull call spreads, or you have about a 35% return using leap options. Hope you didn't mind I taught you something extra. Let's continue on with the video. The second Metaverse stock I have that will make you stupid rich in 2022, and I mean, I seriously feel this way given this stock's history, it's a surefire leap, is Nvidia. Again, I'm not a financial advisor, I'm just an ex-Goldman Sachs bro with a finance degree, but looking at the history, it looks like a momentum roller coaster that's just going up and it's never plans to really go down. Nvidia is up 1000% over 5 years. I remember this stock in the mid-teens when I was in college and presenting Nvidia as an investment idea during my hedge fund interviews. The growth in Nvidia has surpassed anything that I imagined and is supported by a few major growth trends, including the Metaverse. Nvidia's graphic processing units, or GPUs, are the undisputed industry standard for generating lifelike images in video games, giving it a huge leg up in the Metaverse because the Metaverse is going to need graphics. Even if the Metaverse takes years to materialize, Nvidia continues to grow like gangbusters. During the first 9 months of 2021, Nvidia's revenue climbed 65% year over year, driving its earnings per share up by 132%. Nvidia generated revenue of roughly $16.7 billion last year, but that's not even much compared to its total addressable market, or TAM, which management estimates will top $250 billion by 2023, essentially this year. So given Nvidia could deliver 65% returns top line, let's take a look at some options in 2022 or even early 2023 to create an actual leap option for us to make some money. All right, so we're gonna take a look at Nvidia stock, and specifically, again, I have picked a very good time to look at Nvidia stock because currently it's down 4.78% on the day. It's been hovering at the $300 per share mark for a very, very long time. Now, this is a huge momentum play, so taking a look at the 1-year chart makes less sense because obviously the stock has traded for well below $200 per share. So what I'm going to do is click the 3-month chart and take a look specifically what has happened for the last 90 days. Now, if you'll notice, the moving average right here is around $296 per share, and Nvidia has just crossed below the moving average. Now, it's also in the middle of the Bollinger Band, so this is a company that I think has tremendous support, especially around these levels. Now, I do believe due to potential really good growth and potential good earnings that this stock can reach back above $333 per share and potentially even around these levels of $350 per share. So that's around the strike in the level that I'm going to look at for the January 2023 call options. Now, the stock is down a lot. It's down almost 5% now, which means it's a really good time to run this strategy. Now, in my private group, again, I did sell a lot of different spreads. For example, we have made $2,400 selling call credit spreads back when Nvidia was peaking. Now, Nvidia has sold off a lot, so I have changed my mind, and rather than selling call credit spreads, I am more bullish on the company, and I'm going to look into buying some leap options. So again, we're going to pick the January 2023 leap option. This is going to give us 1 full year to hold the stock, which will give you 4 straight quarters of earnings, which is fantastic given that Nvidia has high growth and has a lot of potential to move. So again, I believe that the stock can peak past $350 per share, but of course, the stock can also go to $400 per share. But let's just take a good center point of roughly $370 per share. Given $370 per share, all of these options right here are going to be attractive because they're at the money options and they all have a break-even price of less than $370 per share. For example, an at the money option for this $285 strike right now has a break-even price of $340. Or in other words, if Nvidia stock were to go to $370 per share, this option right here would have a total gain of $85, given the premium of $55 is going to be a 55% return. That means Nvidia actually has more premium than the Facebook example I had with leap options. However, I also want to go through a bull call example with you as well to take a look at exactly how much money you can make using a bull call spread. So again, what I'm going to do is I'm going to buy the $285 call option, and now I'm going to sell the next leg up. However, the next leg up is going to be a $250 spread. I tend to like to stick to $500 spreads because it's more scalable for my larger portfolio. However, if you have a smaller portfolio, a $250 spread is just fine as well. But I'm going to pick the $290 call option to sell. Now you'll see that the total cost is $2, but the total return is going to be $5. So we have a potential to 2.5 times our money, depending on the cost right here. So you have seen that the cost just jumped to $245. In fact, now it's $177. So it really depends on the price that you pay. However, this opportunity right here is actually presenting roughly 250% return on your money. So this is a 2.5x potential position. The third stock that I have is Unity Software. Now, Unity is a very interesting name, and it's a very interesting stock that I'm going to show you some options on. While it may not be a household name, Unity Software is well known among the gaming and developer communities. It has a market cap of $40 billion. This company has potential to be worth $100 billion in the next couple of years. In 2022 though, I believe it can see a 30% pop in its stock price at the very least. That makes call options very attractive on this company. The company provided a set of software tools that help developers create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, and consoles, as well as AR and VR devices. These tools will create the real-time graphics underlying the metaverse. But Unity Software doesn't need the metaverse to be successful, as evidenced by its third quarter results. But the metaverse exposure is icing on the cake. Whether the metaverse takes a year or a decade to spring to life, Unity Software is prospering either way, and it's set up in a really good position. The company generated revenue of $286 million, up 43% year over year. At the same time, Unity delivered a loss per share of 41 cents cutting its loss by more than half. Not only did the company beat expectations, but it raised its full year outlook. Unity is now expecting revenue of about $1.08 billion, up roughly 40% at the midpoint of its guidance. So you already know we have to take a look at the options and look at specific calls that we can buy to make some money. Now, Unity Software is another stock that has a tremendous pullback today. It's down 8% on the day, and in the past 3 months, this stock is actually sitting pretty flat. Now, Unity Software has a lot of volatility. It also has a lot of potential. As a smaller company with higher implied volatility, this stock has the potential to really rise to the moon. Unlike Nvidia and Meta, which also have opportunity to rise to the moon, Unity Software has more opportunity since it's a smaller company, and it's easier for a small company to rise fast in terms of market cap. So I believe the price for Unity in a good case scenario in 2022 can be $250 per share. So now we're going to go to trade Unity options. I'm going to go to January 20, 2023, just like I did for Facebook and Nvidia. Now, taking a look at the options, they look very, very attractive. Unity has fantastic options and very good implied volatility. In fact, looking at the implied volatility, it's about 55%. For context, one of the highest implied volatility stocks, Tesla, has just over 60 implied volatility. So Unity is competing with Tesla-like implied volatility, which means that the premiums are really high. Now, that's not necessarily a good thing if you're an option buyer. However, it doesn't really matter because Unity stock has so much potential that it more than counts for the higher implied volatility and higher premiums that you're going to be paying. So for Unity, something that I'm actually going to recommend is going a little bit farther out of the money. Now, this is a little bit riskier because you do need the stock to rise a lot more, for example, 33% just to break even. However, you have so much more upside and so much less capital that you have to put up front. For example, here, only $2,000 to control 100 shares of Unity, which would cost you $12,700. Now, in this example, the break-even price is $170 per share. If Unity were to even go to $200 per share, you would have a $50 gain on a $20 investment, or a 2.5 times return, again, similar to Nvidia. Now, if Unity stock were to go to $250 per share, you would have a total gain of $100 on a $20 investment, or essentially you can 5x your money. So Unity presents one of the best opportunities, but also it does have more risk than the other two stocks that I mentioned. If you do want to follow along with my trades, make sure that you sign up for the first application link below. I'm super excited for 2022. Make sure you don't stop watching the channel because I have so many more free videos that you can watch by clicking the playlist or watching this video right here.